What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 28th of 2018. Well, folks, if you can't tell already, I'm finally back at home. It's been about a month and a half since I've been able to sit in this chair and do a video on the DataDash channel for you all, and it feels so good to be back. Now, nonetheless, I had a great time on my trip getting to see so many people from the global DataDash community and getting to visit so many places that I've never been to before, because really it was my first time traveling internationally. So it was really cool to have a good reason to do it, and I had a fantastic time. Now, keep in mind, though, for those of you who are interested, I'm going to be summarizing my trip in the next few days in a video. However, I thought I might as well go ahead and dive back into the grind of things and do a video that you guys have been eagerly yet patiently waiting for, and that is a daily update on the DataDash channel. So without further ado, let's go ahead and dive right back into the swing of things, guys. So first and foremost, I want to spend some time to talk about market capitalization and perspective in regards to crypto markets. I know, seeing as I have been relatively absent, a lot of people are very curious as to where I stand on the market. Am I still relatively bullish? Do I think that the cycle is over and we're moving back to the upside, or that we might be taking more of a bearish tone? Well, the reason why I haven't been really too eager to continue updating on my position, guys, is because I'm still sticking towards where I am right now. I still believe that the market is taking more of a bullish phase here. I think that we've gone through one of the heavy cycles for Bitcoin that we really needed after a year where Bitcoin went from 1,000 to 20,000. In January and February, if we spend some time talking about perspective, we can look back at January if we really take a step back, as well as the early part of February, and see the absolute panic that was driving into markets and the FUD that was really getting spread around. The headlines on South Korea, India banning cryptocurrencies, banks shutting down crypto transactions, all these really big fear-mongering campaigns by the media and people who run the headlines. But a lot of it turned out to be really smoke and mirrors. The fundamentals haven't really changed. And for the fundamentals that have changed, there's been a lot of positive news from market leaders like Bitcoin, which we're going to be spending a lot of time talking about. So, as we can see, price action has started to recover a little bit. We've gone from a bottom around $300 billion up to around $450 billion. And now what I think we're going to see possibly is a continued positive trend to the upside. I'm hoping that we can get above over the next few days. I'm going to keep on looking for this target above $500 billion, and then a rest of support on this previous resistance here in market capitalization, continuing to see that we can cycle up to new highs. That's generally what I'm looking for. But the question is, where is that valuation going to come in? How is the market going to keep growing? Well, I want to look at two dominance indicators here, guys. The story hasn't changed too much. This is something, again, I really want to emphasize in regards to playing these market cycles. Look to where the dominance is showing support or it's showing weakness. When we were taking a step back into December, we were looking for one serious indicator, and that was other coins, the coins that are excluding the top 10, reaching 25%. And look exactly where that white line, which is the other coin indicator, where that market dominance stopped out both times, right under 25%. So because of this, guys, we can see that other coins are now starting to correct. We obviously know altcoins have started to lose a serious amount of valuation comparative to where they were back in December and maybe early January. And now we're starting to see one serious king rise up to the occasion, and that is Bitcoin. Again, we have to play back to those market cycles, guys. I know it seems kind of repetitive, but it's a very important lesson to take in if you're going to be playing the larger trades, which is what, if you're going to trade, I recommend you do, because playing these bigger swings is much easier than day trading. It's what I do personally. And look at this. We can see Bitcoin dominance rising. So because of that, securing a lot of positions in Bitcoin has provided to be much better than trying to trade a lot of risky altcoins in this case, because the market's taking a more secure position. People are moving back to the more secure plays like Bitcoin and other market leaders, as well as switching to Bitcoin because new liquidity is going to enter in the market now that Bitcoin is at new lows. The big thing I'm going to really press, and you're going to hear me talk about, is the idea of ETFs coming out. Financial institutions getting their hold on these markets and really getting a stake in playing in regards to this, because this is very different than something like the dot-com era. With the dot-com era, we had retail investors coming after institutions in regards to getting into the game. And retail investors are a term for someone like you and I, someone who's kind of more smaller scale rather than the big dogs. Whereas in this place, in this case with cryptocurrencies, we've had retail investors get in, average everyday people, and then we've got the institutions coming. So I think that when we're going into March, April, and May, we've got a lot of things to look forward to. So seeing as Bitcoin's cycling up, where is it going to go? I don't know, guys. We'll have to see where the dominance goes in regards to this. If there's any new steady competitors coming into play, that could change up things. So a black swan event could completely change our targets. But I think generally we're going to be the upper 40% or lower 50% range for Bitcoin, somewhere lower than previous levels. And over time in the longer trend, Bitcoin will lose dominance. But for now, I think Bitcoin's the stronger play here. So again, we're betting on Bitcoin here. Bitcoin is still at a relative discount from the highs, not exactly 50%, but relatively close. And because of that, I think it's the play right now. We need to get that liquidity into the market. So because of that, let's go ahead and dive in and do a little bit of a trader's analysis. Let's go ahead and talk a little bit about Bitcoin specifically. Now, I don't want to overcomplicate it, guys, because I think we can obviously understand if we take a good step back here that we had a nice parabolic run up and a pretty dramatic sell-off to meet with that exuberance in the market. And the reason being that I'm really confident on this is because we had more than a 50% correction. I think it was around 75 to 80%. It was a pretty large correction. And we went all the way down to $6,000. Now, what I'm noticing here when I use one of my favorite tools, the Fibonacci retracement, is that the Fibonacci retracement from the top to the bottom here is really showing signs that the market's treating like this, treating the top and the bottom that we have so far as the full market cycle. We can start to see it, for example, the Fibonacci level here at 38% retracement, we're starting to see some resistance and some support here at the 23.6% level. So as we can start to see the price bouncing around in these Fibonacci retracement levels, what does this tell me? Well, it tells me that Bitcoin is trying to signal strength. We've obviously seen what appears to be the bottom as of now, and whether or not we move a little bit lower in regards to where we're standing right now, I think more than anything, we're going to see more upside. Now, again, I'll go ahead and share the bearish case in regards to Bitcoin for those of you who want to hear both sides. If Bitcoin cannot maintain above the 50-day or the 100-day, it gets shot down and over the next few weeks goes below the 200-day moving average, that could be a cause for concern. But I honestly don't think we're going to see that. And until we see that, I'm not taking any serious panic in regards to crypto markets. My bullish case for Bitcoin, though, is that what I think it's going to do over the next few days is hopefully form over the 50-day moving average and attempt to get over the 100-day and see rejection around the 50% retracement mark on the Fibonacci's. And then after coming down, after getting a little bit of resistance at the level, it's going to come back down to the 38% mark as the 50-day starts to curve up and provide support. And then after that, hopefully we can get above and go towards a higher Fib level and then come down and find support on the 100-day moving average. And if that's the case, if we can build nice solid price strength confirmation at that level, we could really start to see Bitcoin climbing back up and retesting the highs at 20,000, possibly going even higher. Now, again, you guys got to analyze this for yourselves. I think this is personally where I could see it going over the next weeks. But again, this is a little bit forward thinking into March and April. So I'm not going to do this deep of an analysis each time, but we're going to definitely keep an eye on it and see if we can, hopefully see this common trend in Bitcoin. I think we're obviously going to be taking a more positive approach in this market, guys. Again, the FUD has gone away. It's evaporated. The fundamentals are looking very strong, as we're going to talk about in this video. So let's go ahead and take a look at some other market leaders. And because, guys, as you can probably tell, I'm keeping pretty bullish on Bitcoin right now, it's not going to be such a positive case for altcoins because there's still a lot of flushing going on in regards to price action. So, for example, we take a look at Ethereum here. Notice how, for example, Ethereum, it's starting to roll back over, much like a lot of altcoins comparative to Bitcoin. And now what we're seeing, I think, more than anything, is a continued downward movement in price action. I think Bitcoin's going to continue to gain dominance, and players like Ethereum and Litecoin that were really benefiting from Bitcoin having high transaction fees during December are now starting to lose a lot of that optimism because Bitcoin fees are cheap. They're cheap again, and now people can actually send transactions with Bitcoin in a quick fashion and for low fees. So because of that, I think Ethereum's still got a ways to go. Now, where do I see Ethereum going? In very simple perspective, I think we're going to see it come down to a very necessary price level, and that is a previous support level here at 7 million Satoshis. Now, why do I also have a little bit of additional support in this idea? Well, look what's coming right up there and is hanging right at that level, the 200-day moving average, the red line there. If we can get support on the 200-day moving average for Ethereum, and whereas over here it collapsed through the 200-day, if we can find nice price stability there, maybe we could have a plan Ethereum. Maybe we could get Ethereum there and try a trade on it. But for now, I'm waiting for it to continue going down. Nothing negative on Ethereum on the long term, just personally in the short term. That's where I'm currently standing. So let's go ahead here and take a look at Ripple. Ripple now collapsing down below the 100-day moving average. Again, guys, I really want to spend some time. I'm actually going to pull up the right chart here because I don't have the right exchange. This right here, we'll take a look at Bitrix's price action. I really want to send signals here in regards to Ripple, guys. Look towards previous price action and previous history, because if you don't learn from it, you'll be doomed to repeat it. Look at the previous price history, guys, how similar this is to the previous run-up in May. I think that we've got a ways to go, guys. I don't know if we're going to be going down to below 2,000 Satoshis or anything like that, but I will say for Ripple, not only do I have some fundamental questions on Ripple, but on a trader's perspective, I wouldn't even consider touching this until this comes down to the 200-day here. Again, I'm waiting for it to come down to the red line here, so we've got a few more thousand Satoshis to drop down, in my opinion, on Ripple. It's just, again, my perspective on it, guys. As much as you could consider this getting it at a dip, these were pretty ridiculous levels for Ripple. So I think we need a pretty dramatic correction still on this player, and to see if it can build price strength confirmation on the 200-day. All right, so let's go ahead here, taking a look at Bitcoin Cash. The good news for Bitcoin Cash here, well, actually, I wouldn't say it's really good news. I'd say it's kind of bad news in regards to the trading opportunity, is that with Bitcoin Cash, I was telling you guys over my past few videos that I was looking for a potential trade with Bitcoin Cash here. And whereas it could serve through this wedge as a potential for an upside trade. However, right now it's looking like if we get a good volume sell-off here, the price action is starting to curve on the daily, and we might break through the wedge here. Now, again, keep in mind, it's still kind of holding on there, but if it holds, maybe we could possibly see a trade to the upside. I think more than anything, though, it's going to break down, and that's due to fundamentals. Again, going back to what I was talking about earlier, whereas Bitcoin Cash could serve as that entry point for new liquidity to the market, replacing Bitcoin, which had high fees. It's kind of irrelevant right now, guys. Bitcoin fees are low. So because of that, the fundamental catalyst that I was thinking would push this higher really isn't there. So because of that, I think the Bitcoin Cash trade is failing, but we'll keep an eye on it, see if it finds support there. All right, let's go ahead, take a look at Litecoin here on Bittrex. We can see Litecoin is still hanging around these highs up here comparative to Bitcoin, guys. I really want to drill this in. Look, I know there's a lot of Litecoin fans out there and people who have asked me for my perspective on it. And as much as I don't mind Litecoin for the long term, in the short term, guys, as a trader, I'm not looking to buy at these high levels. There's not too much TA you really can do here. It's more the fact that we're trading at a higher price point. Usually when Litecoin reaches over 2 million Satoshis, it's usually not a good buy historically. I mean, you can just simply draw a line here and see the past performance. Now, if Litecoin can find some support on these moving averages, which is what I'm looking for price strength confirmation, if we can see that, then possibly we can consider doing a trade at maybe a higher level than we usually would. But again, look at where that volume comes in, guys. The institutions buy at the lows. They don't buy at highs. All right, looking at a few other market players. Interestingly enough, NEO holding very strong at this point. Now, again, I'm not going to be biased in this sense, just like how I was, critical on Litecoin. Again, you're trading at all pretty much all-time highs in Bitcoin comparative, or at least close to all-time highs. And so long as we can't maintain support on this 50-day moving average, which is riding very close, whereas the other moving averages are tailoring quite far away, we could possibly see a correction in NEO. It's one of the few that hasn't actually corrected, though the fundamentals, I think, have been relatively strong. There's been a lot of positive news for NEO. I personally can tell you all, I'm not trading this right now. I've got, obviously, my long-term positions on cryptos, but as of now, NEO is not one of my trading targets. So, last but not least, ADA, BTC, Cardano. Let's go ahead here and take a look on Bittrex. As we can see here, Cardano, where I was looking for it to possibly be a buy around 3,000, we had not only a support there at 3,000 temporarily, but a rejection at the 100-day. And this is sort of short-term bad news in a trader's perspective for Cardano. It's good news for us in regards to an opportunity that might arise, because there's no serious support until 1,300 Satoshis down here. Now, I don't think we're going to drop all the way down to 1,300 Satoshis. I think Cardano just has a lot of good fundamental strength behind it. But until we get the 200-day moving average, that is really our last level of technical support. So we're probably, kind of left in the wind here in a sense. We don't have much to play with in regards to technically analyzing where this price is going to go. I'm definitely going to be looking to probably add going into lower prices, but not at this level right now, guys. I still think it might have a little ways to go. Again, keep in mind, Cardano had a great run up over these past few weeks in December and into January. And now we might need a little bit of a correction, just like all other players. So anyways, that's a little bit of technical analysis on the market, but I want to go ahead and really focus on the big topic that has been kind of swirling around the market, and that is SegWit adoption. I'm going to go ahead here and refresh it just to see how much optimism has come into this, guys. We have more than over the past few days. Actually, I'll bring it here just to the last 3 days. We have more than doubled SegWit adoption here, folks, to 30%. This is massive for Bitcoin and for those who use it for daily transactions, whether it be for trading, investing, or spending it as peer-to-peer digital cash. This means that so long as SegWit adoption continues, we're going to see lower fees. And this has been due to a lot of things. We've obviously been talking about it in records on my Twitter account. I talked about it for a while, and as well as in my videos, that there is a lot of adoption from Bitfinex, from Coinbase, and other exchanges, I know Bitstamp as well, that have been competing to adopt SegWit so they can offer lower fees. And so long as one does it, the dominoes are going to start to fall, folks. Once one exchange does it, the others have to follow. They have to keep competitive with this kind of thing. Fees are the main thing that not only generates income, but also keeps them competitive comparative to other exchanges outside of things like safety and convenience. And because of that, we've had a lot of positive reduction in fees, and it's making Bitcoin much more feasible. But it's not all just due to the exchanges. Recently, the Bitcoin Core team came out with Bitcoin Core, the 16th reiteration of Satoshi Nakamoto's original Bitcoin client. And this has now allowed people to see a reduction in fees due to the fact that it comes with full SegWit support. So there's a lot of great things about this, guys. Basically, in simple terms, this is meaning a reduction in fees, just like SegWit in general. It's a restructuring of how how basically we're removing the witness from the transaction and reorganizes the transactions within the block. So it makes it that practically you can fit in 4 times as many transactions into a given block. So this is really exciting stuff, guys. Again, to see the Bitcoin Core client here finally having this feature is a very good first step. It's been kind of asked for a while, seeing as SegWit's been out since August. But it's good to see it finally implemented and to see that this is also helping, along with exchanges, to finally put a reduction in fees. So I'm going to leave these articles down below in the description if you guys want to dive through this, learn a little bit about what the Bitcoin Core client brings. But again, this is good news overall for Bitcoin. And because of that, fees have been at a minimal. Now, it is fair to state that the demand for transactions are generally down for Bitcoin, to be fair. But I can tell you all that this average fee right here, it's usually technically lower for using a SegWit activated wallet. For example, I've used my mobile wallet and I can send Bitcoin transactions for around 11 to 12 cents. I mean, it's absolutely cheap right now. It's completely feasible to use it either as a way to enter liquidity into the market or to hopefully make peer-to-peer digital transactions. Along with this as well, the infamous story, this is something that I know many people have probably talked about as Bitcoin's price has gone up. The original individual who had bought the first public transaction of Bitcoin for a common good, the pizza story where a guy spent over 10,000 Bitcoin for a few pieces of pizza, has now done it again with Lightning Network. And he's been the first to actually make a serious purchase with Lightning. Now, to be fair with you all, I know this might get some people interested in the idea that, oh, is the Lightning Network ready for consumers? Well, as much as it's launched on the mainnet and you can open up payment channels and open up a node on the network, as much as that is something you can do right now, the software and interface is not there yet. The story kind of explains how it was a little more complex. It's not what an average transaction would look like in regards to how Lightning Network is going to operate in the future, where you won't have to know what's going on in the background. It's still very kind of on the back end right now. But the story is really interesting. I recommend you guys dive into it. Instead of paying for 10,000 Bitcoin for a pizza that he did back in 2010, now he only spent 649,000 Satoshis for $62 worth of pizza. So again, really interesting story. I recommend you guys go dive through it. Really positive story. It's funny how he was the first to make it to Lightning as well, even though it's definitely not there yet, but the technology is definitely functioning and it's really interesting right now. All right, so last but not least, I want to talk about Bill Gates, the nonsense crypto comments that many people have been telling me, Nick, Bill Gates has been talking negative about crypto and Bitcoin. What's this all about? Well, let's go ahead and dive into the quote here and talk a little bit about where there's a little bit of misleading statements and where Bill does actually get something right. So this is the major quote that's going around right now. Right now, cryptocurrencies are used for buying fentanyl, which is an opioid, and other drugs, so it is a rare technology that has caused deaths in a fairly direct way. I think the speculative wave around ICOs and cryptocurrencies is super risky for those who go long. Okay, so I'm going to tell you what he gets right and what he gets wrong. What he gets wrong is this whole idea that cryptocurrencies like Bitcoin are being used to buy drugs. Now, I would say that maybe for privacy coins, that could be the case. But for people who think that Bitcoin is still being used, as well as other major cryptocurrencies is being used to purchase drugs, they couldn't be further from the truth, because no criminal right now is using Bitcoin to make transactions for drugs because it's on a public ledger. Privacy coins might be a different case, but in this case, the mass majority of cryptocurrencies are not being used to buy drugs. It's in very rare cases. And people, again, this is something that I want to always drill in, though I don't want to be opinionated. People are always going to find a way around things. They're always going to be using, some form of exchange to buy goods and services. And it's just one of the sad realities of life and stuff if you think that's a bad thing. But the second thing that he does sort of get right is this idea. I think the speculative wave around ICOs and cryptocurrencies is super risky for those who go long. Now, yes, this is a very volatile market, guys. And to be fair, on the topic of ICOs, I think there was a number that came out the other day that there was like 40 or 50% of ICOs that had launched in 2017 have already practically failed. So it shows that, yes, this market is very risky. It's very high risk if you're putting up a lot of money, which is why you should understand that risk before you step into it and understand that you really have to find the fundamentals of good projects and good teams that are going to stick around. So again, I don't think this is the worst statement ever. To be fair, you guys always got to keep in mind that it could always be one of two things. One, Bill, much like people like Warren Buffett, just generally don't understand the technology to a full degree or the capabilities of it. Or it could be very well that sometimes individuals have different interests behind the scenes. I'll leave that article for you guys as well. Anyways, that's it for the video, guys. Thank you guys so much for watching. It feels really good to be back here at home, and I definitely have got a lot of stuff planned. I got a whole list of ideas for the channel right here on my desk. I can't wait to start producing content again for you guys on a daily basis, and I want to thank you guys again for your patience. You guys have been awesome. So without further ado, guys, I'll see you around in the community in the future videos, and until then, I'll see you guys on the next video. Stay tuned.